festivities, because I think from now and next 20 days, it's full of festivals. So here from HDFC Securities, this is Abhishek Mehrotra, Head of Investment Products. And we have Niket Shah, who is CIO from Motilal Asset Management Company. Before I hand over to Niket, I think one thing which I think it's just 45 days back, we have connected again for a fund called Motilal Oswal Business Cycle Fund. And really, it's a good start, Niket. I think the NAV is hovering around 11, and nothing beyond we can say, because it's just 45 days. But yes, the start has been good, and we wish all the best and to you on that. And before we move on to the fund which we want to discuss right now, Niket, can you just throw some light, because market has been volatile. I think last 7 days has been giving jitters to a lot of our investors, and they also want to know what is it there for them. So can you just spend 5 minutes on the Indian markets, how it is, and what is your sense about it? Though I know in last call you said September will be crazy, and it will be fairly volatile. But we couldn't see that in your portfolio. Your portfolio was heading north, but that's good. And hope all the investors who have participated would have garnered more confidence. And so over to you, Niket. Let's talk about markets first.
Yeah. No, thanks, Abhishek, and thanks to the entire HDFC Securities team for having me here again. Such a short 15-day back we were at business cycle. So just quickly on business cycle, we are right now at about 15% alpha in just 1.5 months. We are now at the NAV is about 17% up in just matter of about 40 days or 35-40 days. And we believe this performance should kind of continue as we kind of go forward. So I don't think there is any reason to worry. We will continue with a very strong performance on business cycle as well. So it's a good start. So moving to markets, see, I think we were cautious on the markets last time when we spoke on business cycle fund that we'll be very selective. We are seeing polarization in markets. We have been seeing some slowdown in capex from government side. We are seeing cement volumes being flat. So all of those concerns were there. And on top of this, the China issues really kind of accelerated, where China came up with a stimulus package. And the anticipation is that tomorrow they will come out with an even bigger stimulus package, which means that a large amount of FIIs who are invested in India will move out of India into China, right? That's the big worry that everyone has. I think it's all technical in nature. Beyond that, and generally things like moving out of India into China would last about 15-20 day period, right? In last 1 week, or say I would say 7-8 days, trading days, India has seen 90,000 crore worth of selling from FIIs, right? And the Nifty is down only 4%, right? So if there is a big stimulus package tomorrow, I think there will max it can be 1 or 2% at best, but otherwise we are only moving up now. I think we are now in a very good position because a lot of stocks have corrected 10-15%. Valuations have become slightly more reasonable. And at the same time, we have also gone 1 quarter ahead, right, in terms of rolling it over from an earnings growth standpoint. So my sense is that hopefully by Monday or Tuesday, worst should be behind for India, and we should start heading up again. At the same time, while I said there were signs of concern because of lower government capex and all of that, we are now started to see significant amount of improvement on the ground on capex side. So we've seen NHAI giving a large amount of orders, railways getting into action. Yesterday, a large 1.75 lakh crores worth of money was transferred by center into states and telling the states, please go and invest quickly. So we are seeing that intensity coming back, which was there pre-election and which was kind of missing for the last 5-6 months. We are seeing that intensity increasing now from the government of India. And hence we believe, things will become much better as we kind of get into the second half of the year. So I would say last time I was cautious. This time I'm slightly more positive. I think we will end the year on a lifetime high is a safe conclusion, given the fact that if you look at the US election, which is a very important indicator for us, there's a significant probability now in favor of Donald Trump. yesterday, or whatever media articles we've been reading. And obviously, elections is anyone's guess. But if Donald Trump had to come, then market will, celebrate it much positively, given his agenda of cutting tax rates in US. And whenever we see that US tax rate get cut, enterprises will be flushed with more profitability, and hence the intensity to spend also meaningfully increases. And when they spend, they largely spend on IT, and a large amount of IT stroke digital companies in India will tend to benefit. So keeping in that picture in mind, we are now coming up with a digital fund. I will kind of explain you about the digital fund in a bit, but quickly on digital, I think structurally in and around everything what is happening with us, we are seeing digital being a center theme, right? This was the fund that we desperately wanted to launch since a long time. In fact, this is a fund where I would say after a reasonable gap, I am personally investing in this fund, given how much I'm affectionate with digital as a theme. So I would kind of quickly take you guys through some of the slides, and it's a interesting theme. It's probably my one of the favorite themes as far as India is concerned. If I would have 100 rupees, I would put say 40-15 mid caps, um, balance about 25 bucks in multi cap and business cycle, and around 20-25 bucks in digital, right? So that is the amount of love and affection I have for this theme. Diving in, today the digital GDP of India is very small at roughly about 8% of GDP, right? Which we believe, given the growth rates of this digital GDP, we believe this is likely to move to 20%. Which means that if from 2024 to 2030, GDP growth rate will, if assuming a 7% GDP growth rate, 100 rupees GDP will become 170, which is 1.7x, but digital will become 4x. It's very clear that digital will grow at a fastest pace among the entire GDP constituents that we have today. Now look at the digital companies, right? When I say digital, these are some of the companies that we will also look at from an investing standpoint. But when you look at the digital companies, right? All of them have delivered absolutely phenomenal growth of more than 30% on an average. Some of them are lower, like InfoEdge, which also have a slightly larger base. But all the newer guys, which have got come into IPO market, have actually seen more than 25-30% earnings growth on a sustainable basis, which I think is a quite a positive thing. And this I think should continue. Now, I think there are digital pillars in place. Very strong foundation has been already laid out, not only by the private but also by the government side. And we believe India is on its way to $1 trillion digital economy. So, three, four things which are important basics wise. So, smartphone penetration is 73%. We are now more than 100 crore smartphone users. We have 75 crore of them which have internet on their mobile, which is a penetration of 52%. This number, by the way, is improving every quarter after quarter. The number of UPI users is 35 crore people, right? 25% penetration, right? So what are we trying to looking at this? One thing is very clear that this digital theme is not for rich people or tier one, tier two market. It is for pan India. Look at the UPI volumes which have gone off the roof, right? From nowhere in 17, this has gone to almost 144 billion INR. Now, if you look at the phrase buy mutual fund was searched 16% more in 2023 as compared to 22, right? Why is this so easy to get data on mutual funds, so easy to get data on everything? It's just primarily because of digital benefit that we generally see. Look at the penetration of digital, right? It was 13.5, 14%. Today it's 52%. And this number in our sense is anywhere going closer to 60% in the next 4 to 5 years, right? So the internet penetration in the country is increased by 4 times. So first round is improvement in penetration. First round is improvement in mobile phone penetration, then internet penetration. Now, once you have internet, you will start fidgeting with that mobile phone, right? Which is quite important to get into some of the stocks. So if you look at from a sectoral standpoint, in 2018, there was just no digital company in India in a meaningful fashion. Nothing was there until 2018. Look at 2023. There's a Nykaa, there's a First, there's a Zomato, there's a Policy Bazaar, there's Paytm, there's MapMy India, there is Delivery, there's TBO Tech, there's Oyo. So many of them have suddenly come across sectors. It's not that it's only come in one sector, right? So the beautiful part about digitization is it actually cuts across sectors, right? Which is absolutely phenomenal and absolutely fascinating. So, if you look at our daily routines have also got transpired and transformed in multiple aspects with technological adoption. You look at, traveling to work, it's Uber. And you have team meetings, which is Zoom right now, which is what we're having. We have food delivery. Then you have shopping, which is e-commerce. There's education, which is ed tech. There is leisure, which is travel. And then there are managing investment, which is the likes of Zerodha and all of them. So it is actually getting cut across our day-to-day usage as such. Now, average mobile data user, right? We used to initially consume 11.2 GB of data per month. Now India is consuming 24 GB of data per month, right? Look at the number of subscribers growth that we have seen. It's almost been 2x in the last 4 years. The beautiful part about the telecom industry is that if you look at the 5G data, right? We used to have 1.7% 5G penetration in 2023. This number is 15%. This number is, by the way, expected to move to 85% by 2030. You look at all the sales channel for new businesses, whether it is phone, whether it's social media, everyone is now using digital. You're seeing monthly transacting users on Amazon, Flipkart also being very, very high. The traffic share of top social media platforms continues to remain again very, very high because of digital. So moving to US. Now, while we're talking about India and all of that, but if you look at US market today, all the top 7, 8 companies of US are largely digital. Nvidia, which is likely to do a sales of $200 billion. Netflix, Apple, Amazon, Salesforce, Microsoft, Facebook, all of them are essential digital companies, right? And all of them have seen very strong growth in earnings. So it's not that it is India specific, it is absolutely global in nature that we are able to see such strong growth on the digital side. This probably is one of my favorite charts, and it also shows you how value is migrated, how people have changed their preferences over the last few years. Historically, if you look at Walmart, used to be the largest guy on the commerce side, on the grocery side in US. But look at from 2014 to 23, as the penetration of digitization has improved, what has happened? The growth rate of Walmart is only 3%. But at the same time, Amazon came and look at the growth rate of Amazon, it's 23% CAGR. You look at IBM, it's declined by 4%, right? You look at Salesforce, growth of 26%. Citigroup, PayPal, similar story. Look at Blockbuster, down 8.5%, and look at Netflix, up 35%. So what does it tell you? It is extremely global in nature. And this is also not only happening in India. We are slightly late to the party, but it happened in US first. US penetration of digitized retailing was 7% in 2010-12. Sorry, I moved a few charts ahead. Yeah, was 7%. China was at 1%. Today, look at where China is. China has actually crossed US at 27%, and US at 22%, and India is still at 5%, right? But rapidly moving from 0, we've gone to 5%. I think my sense is this 5% can easily move back to 20-25%. Although we have the assumption says by 27 it will be 10%. I am reasonably confident by 2030, India will be at 25% in terms of penetration on e-retail. Then if you compare that, okay, I'll skip this. Yeah. Look at the revenue growth of most of the tech companies, right, on the digital side. From 50, the lowest one is 17. So if you exclude Info, it's because it's technically a very large company from a large cap standpoint. But you look at most of the other mid cap names, everyone is growing at more than 25%, right? Compared to IT, which is still growing at only 11%. Internet economy today is now about 15% of the overall technological sector, right? Which we believe will become close to $1 trillion by 2030. So by 2030, IT services will become smaller and digital will become bigger. Digital will become 2x the size of IT services, which is Infosys, TCS, all put together. Their size versus digital economy size will become 2x of IT services, which is quite staggering in terms of value migration. You look at the size of opportunity, the growth opportunity for each and every category, whether it is SaaS, online travel, online media, ad tech, food delivery. Most of them are expected to become 4 to 5x in the next 7 to 8 years. This is more like a multi-bagger, different sectors with, 4, 5x kind of an opportunity. Then you look at the entire government stack. Now, the government has played a very pivotal role. I don't think any government in the world has been so focused on digital the way India has been, right? And hence, we are ahead of the curve in so many things. Look at UPI. No country in the world has this kind of payments methodology. Now we are going and giving our solutions to the world today, right? You look at insurance, Bima Sugam, you have DigiLocker, then you have FASTag, then you have GOM, you have e-rupee, you UPI, which is a big one. Account aggregator has just begun. A lot of banks and NBFCs are doing account aggregation. ONDC, early days, but very promising start. So you look at so many stuff that the government is trying to do across digitalization to reduce cost, have people more accessibility, and that will really be a very big longer term game changer in our opinion. You look at B2B, look at online share of US in 2022, 16%. India is at only 0.5%, but obviously that number is likely to move much stronger and ahead. Now moving to the fund again. So one important thing about the fund is that while this is a digital fund, we have been very careful to say that it's a digital fund, which means that we will not have significant amount of overweight position in IT services, because it's absolutely clear, and I want to make that point very clear. It's quite important. Most of the digital funds in India have 50 to 70% in IT services. We have clearly said that we will have 70% in digital, at best 15 to 20% in IT services. So it will be a true to label fund. If you want to play the startup stroke, some of the large names like Policy Bazaars or Matters of the world, then I think this is the fund that you really want to, look out for. Now look at why we don't like IT services in a meaningful fashion on the large cap side, right? It's primarily the simple reason. Look at the 20-year market capitalization CAGR, 17-18% for TCS, 14% for Infosys, HCL at 21. 10-year has been even lower, right? For at least the top three guys, which is a large cap name. On the other side, the digital guys have been firing up all cylinders. Last two slides, this is probably the most important slide of the entire PPT, which is how much screen time do we see a year in a day, right? We spend 6 hours and 45 minutes of average screen time, every Indian put together, right, on an average basis. Of that, mobile is 4 hours and 3 minutes a day, right? And then if you compare that with the population, GDP, and look at other countries, you will think that we are actually in a big tsunami right now, right? Where the penetration of mobile is increasing, data penetration is moved to 50 to 53%, and we should see meaningful amount of acceleration now from a transaction standpoint, which will benefit the GDP as such. Yeah. Now, this again is quite an interesting slide, which is you look at how 19th century was, 20th century is, and 21st century will be, right? In entertainment in 19th century, we used to have live shows, right? Then we moved to movies. Now we are moving to OTT. In commerce, we have brick and mortar commerce in 19th century. We moved to malls. Now we're moving to e-commerce. In banks, we had informal mortgages, moved to branches. Now we're moving to phone banking. Similar in healthcare, from generic to telemedicine. Education, we had local schools, colleges, now online studies. Automobile, we have horses and carts earlier, then IC engine, now EV cars. We had paper ways of investing into stock market. Then it went to broking. Now it's mobile trading. In payments, it was coins and notes. Now moved to check. Now digital. Manufacturing, from manual to robotics. Communication, letters, now to data. So clearly, you will see in every category there is significant amount of disruption which digital is trying to bring. This is the last slide, which is why we are different. You guys all know we are a concentrated house. We focus only on less than 30 stock, very high conviction, high quality portfolio. So you will see this as a most concentrated digital fund of India. Second, we have a QGRP philosophy where we don't compromise on quality. So you'll continue to see that. Third, which I highlighted to you earlier, is a clear focus on true to label. Almost all the funds in digital category, right? Digital fund category today invest 60-70% in IT services. We are just going to do the reverse of that. Our 70-75% will be digital, and balance 20-25% will be IT services. So the fund is actually managed by Mr. Varun Sharma, along with me. Varun brings in a very rich experience. He was initially the fund manager for Franklin Templeton Tech Fund, and the fund had done extremely well under his leadership. We're very grateful to have him with us in our team. So one important thing that you will also see now is that we are also building a very strong team from an organization standpoint, because when we're launching new products, I have limited bandwidth to manage all the products. So we need more and more talent, and we are getting India's best talent on board to manage some of these funds. This I mentioned. You look at Fund 1 to Fund 7, all the peers. You look at their holding of IT services in the digital fund. So peer group runs an IT fund and not a digital fund. The name can be digital, but they run an IT fund. We will be true to label from that standpoint. So that's all I had to kind of highlight. I'll stop there. I'm happy to take questions.
No, it was really very comprehensive, Niket, I must say. In fact, at the start of it, there was the thought behind it will be an IT weighted, and now how the way you have split it across and dissected the entire sectors, and each sector has some of a digital play. Few things before we move on to customer questions. One, I think, which I wanted to know, Niket, is look, most of the digital companies which we are seeing are coming to public after the PE exits and all that. And when they come, the valuations are quite high. Uh,
Yes,
so how will you deal with that? And will there be more meat left?
sure.
Because the entire initial chunk of or the bulkiness has been taken away by the PE exits and all. So
Yeah, so Abhishek, a good question. And you would have seen that we've never participated on day one in some of these, right? So when they come and they're extremely expensive and a lot of frothy valuation, we allow them to course correct, right? Let them settle down, let market understand the reality of the game. And we've seen that with a lot of businesses, right? Look at Zomato. When it started, it opened at almost 100 plus 120, went to 160, came down to 40. And there's enough and more opportunity to come and buy between 40 to $50, right? Which is what we did. And then from there on, there is a big runway of growth, right? That it has to offer now to investors. So I think market, if today, if you ask me personally, a lot of these startup companies have been very mindful, and investors also have been very mindful of valuation, right? Given the past experiences with some of these startup companies as such. So I would say that we will not chase them at any price. We'll be very mindful of valuations and quality and governance and growth. So we're not just going to chase it at any valuation if it comes. And hence, if you look at some of the newer startups, even in our existing portfolios, we haven't been large investors given the punchy valuation that they're coming in. There will be a time where the earnings don't come, and if they fall down at a reasonable valuation, we will definitely look at it. There's no doubt about it. We are actually in a test match right now, rather than T20. Right? So in a test match, there are 5 days here. I mean, this is just the beginning of the match.
got it. One more thing, is there any industry weight or sector weight which you have assigned internally in terms of diversification of this portfolio? And because I believe there are certain digital funds, as you rightly said, and they are overly, and because they are benchmarking themselves with the tech side. So how will you benchmark, and how is your weightage across sectors? If
So our benchmark is BSc Tech, but our focus is very clear that we are very happy to have high concentration. So on something that we continue to like a lot, we might go to 8-9% weight as well on the sectoral fund side, right? Wherever we have very high conviction, very high growth, longevity of growth is much higher. We don't mind taking a bold bet that the way we generally take it for other funds as well. So we will be, I would say, slightly more aggressive from a fund standpoint and from an allocation standpoint. But having said that, I think we'll be also very mindful of valuations. We don't want to chase anything and everything at any price. But at this point in time, Abhishek, we are seeing enough and more opportunity on the digital side. I can tell you that I will be very disappointed if the NAV of this fund doesn't become 2x in next 3 years, because the category itself is growing at 35-40%, right? If there's 35-40% compounding growth for 3 year period, you will double your money in 3 year period. Unless until that we mess up something where compounding growth doesn't come to 35-40%, right? So in 3 to 4 year period, I think NAV should easily double, which is a compounding growth of at least 25%, which is what earnings growth is we are trying to assume, right? We believe the earnings growth of the portfolio that we have created will be at least in northwards of 30-35%. So this will be the highest growth digital fund in India.
Oh, that's really a tough call to take. And with the backdrop of foreign institutions coming and playing with Indian market, and obviously they have other opportunities available, as you spoke about China opening up and there's some for. Do you see FI playing a larger role on the digital space, or is it confined to the large cap side, and where probably the you will be operating seems like more on heavy on mid cap as a larger segment?
No,
Can you
I
throw
would
some
say
light?
FI will. I've traveled to US, Europe, Singapore recently in the last 6 months, and there's absolutely crazy amount of love and affection and interest that all FIs have in Indian startups, right? And the reason is very simple. Any startup that we do today in India, right? This just the sheer size of population that we have. It's absolutely crazy, right? So the number of people who can use it, it's absolutely mind-boggling, like similar to what China is. The problem that China runs in the next 25 or say next 50, 70 years, the China population is quite old, right? The average age of China's population is closer to 40s, right? So what will happen is in the next 25, 30 years, 40 years, China's population will start coming down meaningfully. But India's population is not going to diminish so quickly because our age is 28 years on an average basis. So there's a math that we did that in 75 years from now, which is 2100, China's population will become half, right? So a large amount of I would say focus will hence definitely move to India. And digital is a way to go because digital not only gives you transparency and access, but it also is speed, right? The speed to scale up is very fast in digital, right? So I think we will, FI interest in this space is absolutely at very record high levels, in my opinion.
Right, right. So, so all the investors who have talked in, while I'll keep on speaking with Niket, and I'll take out questions. If you want some questions, you can post it in the group or chat, or if you have joined through YouTube, you can post your questions. In fact, I've started getting some questions. This question is slightly different, but yes, okay. Will this fund will follow the Sharia norms, or is that a constraint, or do you, or
That
currently you operate open state?
Arpit, you want to answer that on Sharia norms?
Sorry.
Is the fund going
Could
to
you please?
follow the Sharia norms?
No. This won't be into Sharia. So none of our MF schemes is into Sharia. We have only a separate portfolio management services which is into Sharia. Apart from that, none of our mutual fund schemes is.
Got it. Niket, one more thing, what we have been hearing, and a lot of clients do talk about, and it becomes relatively challenging for them to analyze a tech or a digital company, is because the old kind of ratios don't work out there. So the earnings are very limited, and then if you can't go with P and
Yeah.
all. So can you throw some light in terms of how you will be evaluating? And I'll request all my investors or customers, if they want to participate on this side, probably it's better to go up with a fund manager, because this place is very tricky. Unlike the way we understand normal businesses or manufacturing businesses or banking, where price to book works, where in otherwise industrials and all, you have net asset values. Here in digital, I don't know, but Niket will be able to tell you more how they are planning to value these companies.
Yeah, so I think there are two, three multiple ways to value it. Obviously, you can run a DCF because the growth is very longer in gestation. Terminal growth is very, very high right now. So obviously, one way to value is DCF. The second way is valuation of PE. Now, when you move to PE ratios, which is typically what India tends to do, right? Most of the analysts on the sell side will do the PE basis, right? It depends on how able are you able to predict the earnings of this businesses in the next 2 3 years, right? When we bought Zomato, everyone thought that it is a loss-making company, kabhi profitable nahi ban sakti. Now the anticipation of all the analysts in India is that they will do a profit after tax of 3,000 crores, right, in FY27. Today, as we talk this year, only they're on track to do a profit of about whatever 800-900 crores. If I just annualize the first quarter number, I have no guidance on Zomato, but just annualizing the first quarter number into 4 times gives me 800 crores, right? So, which means that these companies are now showing profitability, but the profitability is also improving at a rapid scale, right? Because what happens is that the denominator in some of these businesses is very, very large. They do, like, for example, GMV for guys like Zomato is, say, if you take food delivery and quick commerce put together, it's a 60-70,000 crores in next 3 years, it will become 1 lakh crore. On that 1 lakh crore, even if you move margin by 1%, right, it just moves the needle very, very sharply on profitability, right? So it's the law of large numbers, right? Similarly, on every digital company, you will see scale being very, very large. So hence, even if they are able to improve the margin, right, little bit, it will have a disproportionate impact on a profitability side of it, right? So I would say that one really has to look at slightly longer term in nature. Longer term doesn't mean FY30. Longer term means FY26, 27. Look at the growth, look at the profitability, look at the free cash flow, look at the moat, what they bring on table. And it's very difficult for someone to come and disrupt them today, right? Because they're disrupting someone else, right? Today, you look at the mom and pop guy, like or a retail store like Demand, the growth rates for them versus growth rates for Zomato, Swiggy, Zepto, all of them, right? There's a big value migration which is happening, and this value migration is not that it's happening for 1-2 years. This is a 100-year phenomenon now. Till the time there's someone else who comes and disrupt these guys, this will be a way of life, right? The way of life, like Uber, is a way of life, right? You just go. You don't think यार 500 यहाँ से airport तक 500 लिया आज, कल 700 भी लेगा तो 700 भी देते हो. It's a way of life.
Got it. So, Arpit, if you are there, can you just tell us the timelines in terms of how long the NFO is available? I think it started yesterday, and when it is ending, and key things.
Yeah, so I'm very much there. So the fund started today only. So I think we are on the day. So
Wow.
The lucky day for us, and I think it's Durga Puja going on, and the 5th of October, and this is for all 15 days. The terms and condition wise, it will be the minimum application size for us is always 500 rupees in maximum of the scheme. With exit load is for 3 months, that is 1%. So the basic terms and condition for the fund is simple.
So I'll
anything you want me to
no, that's
add
it.
to it?
Arpit. So I'll request all the investors, knowing that this fund will the way Niket is looking forward for is to allocate 10-15% of your fund allocation here. This fund is on the high risk side, so please have a risk profiler where you are aware that you are entering into equities and the risk is high. So please have that in mind. We always believe there's a lot of juice out in equity market, but yes, one has to keep his asset allocation at the right mix. So please never forget that. And if this fund is available across our digital properties, it is Invest Right, HDFC Sky, Invest Now, or if you are assisted with RM, you can speak with the RM and participate in this fund. The fund, as told by Arpit, will be ending soon. It's in a 2 weeks time. So you have, if any one of you wants to have more material on it, please reach out to our customer care or your relationship manager. We will be happy to assist you in giving you a detailed presentation on the fund if you want to know about it. And I think that's it. I think we have covered anyways in detail. And so thanks everyone for joining the call.
Thank you so much.
And I know festivities are around, so wish everyone a very happy Dashera, that's just tomorrow. And in Durga Puja, I think that's how it is being celebrated on the east side of India. So thank you everyone, and thanks Niket, and wishing you festivities to you also.
Likewise to you and the entire team of HDFC.
Thank you everyone. Thank you.
Thanks everyone. Thanks.
Thank you so much. Thank you everyone.